Hey everybody, I hope you're all doing well. Today, the market had a pretty neutral day with the Dow up 98 points, the S&P down 3 points, and the Nasdaq down 79 points. Now, just a reminder, this week is going to be a short week for the markets. The market's going to be closed on Friday, but the jobs report or the jobs data, payroll data is going to be out on Friday despite the market being closed. So it's going to be interesting to see how people digest the news over the weekend and see how the market opens next Monday based on the payroll data. So today we're going to talk about where the market is headed. We're close to all-time highs, and last week we talked about how we wanted to see follow through this week and see us push higher to all-time highs, and I think we can do it. But before we get more into that discussion, please read this disclaimer, and you can pause this video as you read it. Okay, so today let's get into the minute by minute. So this 30-minute chart, the market opened down today, but we end up pushing back up. The bulls took control, and in the afternoon, usually lower volatility, lower trading activity during the afternoon, and then we finally pushed back up and a slight fade. And that's interesting because last Friday we had a really strong close in the last 30 minutes, but we faded that this morning. But we ended up pushing back higher, and this could have been a nice bear trap to scare a lot of people, but I'm glad to see this because this just shows that the bulls still have conviction that the market can continue higher. So yeah, just over the last couple of weeks, we've seen the market pull back, and now we're really starting to fall through strong push higher so we're very close to all-time highs. We just need to break above 398, right? And I've been talking about how I want to see us break 400 in April, and I think we can do it. And basically what we've been seeing over the last 2 to 3 months is just what I like to call just natural market activity in a bull market, right? It's just a slow grind higher, up, down, give, take, right? And now we seem to have found support. Let me just move to the one-day chart. Found support on the 50-day on the daily chart, and usually the 50-day is or the silver line is our short-term support level, right? And the 100-day, the gold line, is our medium-term or mid-term support level, and the 200-day on the daily chart, the blue line, is our long-term support level. And we really want to see, as the market grinds higher in a bull market, we want to see them trend close to these support lines, and once in a while they'll pull back and touch and bounce off, right? And that's usually what happens in a healthy bull market. Now, once in a while we'll see a sharp pullback, which ends up being a correction. That's usually like 10% pullback or more, which we saw over here. And that's still a pretty healthy part of a bull market. And we also talked about last week how in a healthy bull market we tend to have, this is over 2013, 2014, 2-year period, how the market tends to have corrections every few months, and that's totally normal, and usually in the long run is a great buying opportunity, right? Now when the market goes below the 200, that's when you want to start. That's when you should start to be a little bit more careful, because you want to see if the trend is going to reverse to the downside or this is just a bigger correction, right? But usually the market over time will continue to rise higher, and I think that what we've seen over the last few days is just part of just a regular market cycle, right? Now today's news, there's really not much going on today, but yeah, today there was a big there's a big fund called the Archegos Capital Management. They basically got margin calls, and they had to sell a lot of positions, and I think that contributed to a lot of fear, and was a small cause or part of the cause why the market pulled back after the open today, but we eventually recovered, right? And there's been a lot of talk about like hedge funds and whether they can navigate this market, especially with the whole like kind of the meme stocks with GameStop and AMC, and them trying to short those stocks and getting crushed by like retail traders like Wall Street Bets and stuff like that. So yeah, there's a lot of kind of talk or some fear over whether hedge funds, like which hedge funds can stay solvent in this environment, and which hedge funds are going to get knocked out of the park, and have to close, right? But overall, besides all those like shenanigans that's going on in Wall Street, I do think the market is looking good right now and is really just primed for breaking up to all-time highs again, right? We just need to get above 400, stay above 400, maybe pull back and then push up higher. And of course, as we continue to push up higher, these moving averages act as support, right? And to see us, just continue to trend up and see the market come up and pull back once in a while. So overall, feeling pretty optimistic with the market. And another thing, I'm looking at the fear greed index right now, interestingly, is in the fear. So that to me is not necessarily a bad thing, because it just gives you more fuel, or it just gives the market more fuel that it can push up higher, right? Because usually when the market is going up, especially when there's a lot of people like just FOMOing in, you see the greed go up really high. And usually when that happens, there's a sharp reversal, right? So of course the famous part in early 2020, before the pandemic crashed the market, and increased again in September, we had the fear going very high, or the greed index going very high, and there was a lot of people chasing this market. Meanwhile, there was a lot of smart money, or Wall Street was betting against the market. We saw the VIX also rise, and usually when the market rises and the VIX rises, then there's going to be some shenanigans, right? Usually a reversal, which is what we saw. So, but I don't really see any of that right now. The fear greed index is pretty. It's not overbought in any way. There's not much greed, and yet we're near all-time high. So I think there's more fuel that we can get to push the market higher. Now, of course, the month of March is going to close soon, so let's just look at this. I'll get back to you on Wednesday, and we can look at the monthly close together. But so far, price action wise, monthly chart of the S&P 500 looking very bullish, right? I mean, look at this. We came down and then we just pushed up at the end of the month, right? Very, very bullish candle. And look at the Dow. The Dow did very well this month, as rising yields and rising dollars has pushed a lot of people into value stocks from tech stocks. And yeah, seeing if we can continue this trend, or we're going to have a bit of a pullback in April. NASDAQ having a bit of a pullback, and a lot of people were scared that people were selling their tech stocks because treasury yields are rising. But keep in mind that we've been going up for the last 4 months, right? Since November. So this could just be something like this, where we go up and then we pull back for a couple of months, 2 months here, and then go up and pull back, maybe another month down, and then we go up higher. I mean, there's nothing really out of the ordinary, right? I mean, we've had times where we've had a lot more positive months before we pull back a little bit. So in my opinion, March is not really something to worry about in terms of the tech stocks pulling back. In fact, it could be a great buying opportunity when we look at the bigger picture, right? Because in NASDAQ, we're seeing higher lows here. So in my opinion, I think that the tech stocks will continue to recover and eventually lead the markets again, right? And maybe we'll see a bit of a pullback next month from the Dow, as these value stocks, people start to sell some of their value stocks, as it's starting to look a little bit overbought, right? I mean, this 7% monthly candle, I mean, that's just incredible. But yeah, overall, I think the market is, I'm feeling very optimistic on the market, and I think the market will continue to grind higher, despite any, negative or bearish headlines that we might hear. So yes, that's it. So that's it for today. Not much to talk about in terms of news or anything crazy going on in the market. I'll be back on Wednesday to talk to you guys about the monthly close, and hopefully the market remains strong and we see a push up. I'm expecting all-time highs again for the S&P within the next 1 to 2 weeks. I mean, it's possible we might pull back to the 50 again to push up higher before we push up higher, but it remains to be seen, and I'll definitely update you guys as this price action develops and the weekend goes on. So yes, don't forget, again, just to summarize, the market will be closed on Friday, but the payroll data is still going to be out. So just keep that in mind if you want to hold some positions over the weekend, or if you don't. It's going to be sort of tricky, because if the payroll data is bad, then I don't know if you want to hold any positions over the weekend on Thursday, but just keep that in mind if you do. So anyways, thank you for watching this video. If you found it helpful, if you found it informative, please like this video, please leave a comment. I try to reply to every comment. Even if it's just a compliment, I'll say thank you. So, and I do appreciate. Oh, by the way, I have 10 subscribers right now, so I appreciate everyone who subscribed to this channel. It means a lot to me. You means a lot to me. I really appreciate you watching and supporting my channel. But if you haven't subscribed, please subscribe. Try to update up to 3 times a week. Two videos at least every Monday, Wednesday, Friday. Although this week I might have to upload on Thursday because the market's closed on Friday. But we'll see. We'll see if there's anything interesting to cover. But yeah. Anyways, thank you all for watching, and I appreciate your support. And I hope you have a great rest of the day.